See if it's still listed, see if it still get a quote on it. See if they still have any earnings yet. But if it's going, write the story down. Some of these work. I haven't heard yet, but maybe they will work. But it's worth tuning in 6 months later. Don't buy it then. Importance of management. Management is the single most important thing in a company. But for an outsider to know great management versus good management versus terrific management versus average management, tough to do. Tough to do. Because you only get an hour at people, sometimes a half an hour. And how do you know what decisions they didn't make? A lot of great companies have been made because the company didn't make an acquisition. They didn't get rid of the division. They don't put in the annual report, we didn't get rid of the tubing division. You know, you don't hear about that. Somebody said, made a brilliant decision, we're going to hold on to that thing, we're going to fix it, and it's doing great. Now, they might be doing great because some management 8 years ago did it right, or some did something right 5 years ago. That person isn't there anymore. Or they didn't make any acquisitions, or they expanded at the right time. So knowing what management, what they can add to it, it's the single most important thing, very hard to measure. I've always said, I'd like to have a company any fool can run, because eventually one will. And you really want to do that. When I bought Toys R Us, they had the formula right. Any 4 people in this room and me could have run Toys R Us. We wouldn't have done as well as they did. They're spectacular. But for the next 15 years, we had no competition, we had a great formula, we could have rolled with it. They probably would have done 3 times as good. They were the frosting on the cake, but they had the formula right, no competition, the department stores know what they're doing, there was no copycats, and they were going to just roll for the next 25 years. Same with Circuit City. So I want the story to be solid. If management can add anything on top of it, that's great. I want to buy the story. Assume management leaves the next day, and they're replaced by the next generation. That's fine with me. If management can add something to it, that's great. I'm not going to buy it because people say they have great management. Because you'll notice great management is always attached to stocks that have been up the last 8 years. You ever notice that? Because I looked at Reynolds Metals. I used to follow Reynolds Metals. The stock has had the same person run it for like 30 years. When the aluminum was tight, they'd say Reynolds Metals has great management. Aluminum going oversupply, these people are idiots. Then aluminum get tight, they say these people are terrific. I mean, it all to do with the price of aluminum. And they keep rating the management by how the stock's doing. It's very hard to measure management. It'd be wonderful to do. If you could spend months with them, really see them in action, then you know, but you don't really get that chance. Be flexible. People have all these biases, all these prejudices. They want to buy high-growth industries. They won't buy financial companies. They won't buy savings and loans. They won't buy companies that start with the letter R. I mean, there's all these rules. They all hurt you. There are great stocks everywhere. There are stocks that are near bankruptcy, stocks in bankruptcies, stocks about to go in bankruptcy. There are companies on the new high list that are attractive. There's companies on the new low list. They're all over the place. They're in growth industries, non-growth industries. Don't cut yourself off to one segment. People have way too many prejudices, too many biases. And I always thought of it, I don't know the women in the audience see this many times, but I always thought of these buy lists at some institutions. We don't have this at Fidelity. They have these buy lists. I think Kmart got on some of these companies' buy lists 3 years ago. You know, Microsoft may get on it about 12 years from now, but they have these buy lists. And I always thought of the buy list as, you buy a new shirt, you ever look in the pocket and you get inspected by 6 or inspected by 8? Do you ever see those numbers? I mean, I always wondered about that. I always think of those buy lists at those institutions where I see that inspected by 6 and inspected by 8. In fact, I'm absolutely, if somebody call me, you could do it any time of day, has anybody ever got a shirt inspected by 1? I mean, do they retire these numbers? Do they have a meeting? I've never had a shirt inspected by 1 or by 2. I think they must raise their numbers in a meeting up to the rafters. But I always think every time I get that number in the shirt, I think of these people working off a buy list of rapidly growing companies, only to have unit growth rate of X or 6X or whatever the number is. It doesn't work. Another thing about it is math, and the kind of math you need to do this. I don't use a computer. I don't have a computer. I really was doing great math. I remember 7 times 7 was 41, and 9 times 9 was 81, and 12 times 12, I think it was 144. So it was some big number. Anyway, I had that one down cold. And I said, this is great. I love this stuff. And the barge left St. Louis going at 8 miles an hour, and the train left Pittsburgh, and this stuff is easy. I remember one day, I think it was 9th grade, it was a grim day, somebody introduced cosine. God, that day, I mean, remember cosine? I mean, Has anybody used cosine the last couple of years? I mean, let's have a show of hands. How many of you have used cosine the last 6 months? But I remember tangent and cotangent. Why would you want to know about tangent? And then remember the area under the curve. I mean, remember that crazy calculus area under the curve? I mean, what the hell would you want to measure area under the curve for? That is such garbage. You don't need this for the stock market. If you can add 8 and 8 and get fairly close to 16, that's all you need. You say 400 million in debt, no equity, no cash, losing money, forget it. They get 300 million in cash, no debt, 200 million in net worth. They're losing 10 million a quarter, but they'll be around. That's all you need. That's all you need. Is not that hard. If you made it through 5th grade math, you can handle this stuff. And I had a roommate in the Army, and it's a story I always remember. He was talking about, he went to this very good school in the South that I won't tell you the name of it, but it's in Atlanta, and it rhymes with Roger Reck. And they had this, my hero at the school was a very good football player. This is my friend, my roommate, telling me the story about this guy. He was a freshman at this great school. And he'd go to the line of scrimmage, and it changed the play. He couldn't figure this out. I don't know if you realize how complicated football is. Half the plays are changed at the line of scrimmage. It's about 300 plays. You go out there thinking it's a run to the right. It turns out it's a screen pass to the left, or it's a draw. All the blocking assignments have changed. All the passing's different. You have to instantly think, uh-oh, new play. What do I do in this new play? Just like that, and do it. He could not handle these deals. He says, give me the ball, I'll tote it. And he'd go for about 8 yards. He was really good at this. Now, this is not why he's my hero. The reason he's my hero, in a classroom about this size, his freshman year, he asked the question, does X always equal 7? Now, he never made it to the second semester. He never made it to the varsity. He never made the NFL because that damn X, he never could figure out X. Now, I always thought at the UN they could resolve what the hell X equaled. They could say, if it's 247 and a quarter, they just finally resolve what X was. We could save all this time and do something useful. You don't need it in the stock market. But, okay, now we'll get to the important stuff. There's always something to worry about. This is the difference. This is what happens in the stock market. Because, see, everybody's got the brain power to do well in the stock market. The question is whether you have the stomach for it. That's the key organ in the body. There's always something to worry about. I went to school, grew up with a kid in the 50s. In the decade of the 50s, there's this big theory that the Depression was caused by a stock market crash. Totally wrong. Less than 1% of Americans owned stocks in '29. We had this big-time recession. In fact, it was a depression. It wasn't caused by the stock market. The economy went down, the Federal Reserve raised interest rates, and we had a big-time depression. In fact, we had several depressions like that from 1850 on. This was only one of about 8 depressions since 1850. But people thought the only reason we got out of the depression was World War II, and they said once we get back, next time we have a recession, we're going to have a depression. And it's going to be a great depression. I never understood that adjective in front of depression. Now, you don't have to be crummy depression or bad depression, but it was always great depression. I never quite understood that one. So people weren't buying stocks in the 50s because they thought that another great depression was going to happen. In addition, people were very scared about nuclear warheads and nuclear war in the 50s. People were building fallout shelters, stocking canned goods. There's something about going to Vermont, building a fallout shelter, putting canned goods in it, that you don't buy Minnesota Mining or you don't buy Eastern Dakota. I mean, the syllogism just doesn't work out that you're buying lots of water, buying a shotgun, buying frozen food that will stay in the freezer with your own generator, and you're looking at growth stocks. Doesn't seem to work out that way, And I remember in the 50s, I remember literally in classes, I was in elementary school in the 50s, and they would come in, they'd have one of these air raid drills. Somebody with a yellow hat would come in, they'd blow a whistle, and you'd get under your desk. Even then I says, I don't think this is going to do a lot of good, But people were worried about a depression in nuclear war in the 50s. And then, the warheads, they couldn't do much damage back in the 50s. Now one of these Stan countries, these Kakistan and Kazakhstan, all these Stan guys that have spun off these Friedman Billings spin-offs from the Soviet Union, they didn't lead it. There was a co-deal with somebody else, like Goldman Sachs, and they were on the left side, though. Every one of these little countries has enough warheads to blow the world up 88 times. Who's built a fallout shelter? We stop worrying about it. There's always something to worry about in the 50s, it was depression and nuclear war. The 50s was the best decade this century for the stock market, except for the 80s. Only slightly better. The 80s are only slightly better. People didn't expect a lot. We had an okay, it wasn't a great decade. They just didn't expect much. We made it through. And the stock market was terrific. Do you remember when oil went from 4 to 40? Remember that period? Oil went from 4 to 40, and the experts said it was going to go to 100, and all the countries of the world were going to go bankrupt. And then the big banks were going to go bankrupt, and we're going to have a Great Depression, and the stock market's going to go down, and you're going to wind up selling pencils and apples. You know, well, I remember oil went from 4 to 40, and the experts said it was going to go to 100. Within 2 years, oil was at 14. The experts, now much higher paid at this point, are saying it's going to go to 4, and we're going to have a depression. And people believed it again. You know, I remember when the money supply was growing too fast, and they said we're going to have a depression. Then it was growing too slow. We're going to have a depression. Remember the LDC debt? Remember the LDC debt? All the banks. Our banks are very smart. They lend all their net worth to Zimbabwe and Botswana and Botswana and all these countries, Chile, a lot of countries I can't pronounce. This is Chase Manhattan and Chemical and Manufacturers Hanover. These countries weren't doing so well. Then they were called undeveloped countries or